Hello, everyone, and welcome to Crypto Atlas. This is an update report for AMC, the movie theater stock. If you guys are new to the channel, do not forget to hit subscribe, hit the thumbs up like button. It definitely helps us out with the YouTube search algorithm. So if you have a second, please make sure you click the thumbs up like button and feel free to share the video on social media if you think other people would find this video to be helpful as well. Please keep in mind, I'm not a financial advisor. Everything I'm sharing is my own opinion, it's my own research, and I encourage you guys to do your own. We've got a couple key things. I'm going to try and throw a lot at you guys right now. Take a look at the day, down 5.3%, down 5.36%. A little bit of a pullback. We had a really nice day for the gains yesterday. Right now, it's really trying to test and establish itself for a closeout above this key level of resistance, formerly a level of support. So for tomorrow, I would really keep an eye on right around $42.73 on the daily closure and seeing if it's above or below that. Strong signs pushing above it would then lead us into the next major zone. I'd be looking at the Fibonacci sequence here at $49.75, which coincides really well with the $50 psychological level. We can actually see on the level of resistance further above that at $50.64. So again, $50 is key for a lot of different reasons. Volume picked up a little bit more than what we've been seeing here fairly recently, but still pretty low by large comparison. RSI is about in the median zone. Taking a look over here, we can see that there are currently 57,291 calls in the money that are expiring on Friday. In order for this to have a substantial increase, really looking at the potential of like a gamma squeeze, first off, the biggest thing we need is margin calls really start taking place. Those take place, the price is going to start to rise. The price rising is what's going to have a lot of these call options actually be put into the money. So currently there's 213,355 calls that are expiring in out the money, and that's for this Friday. So the price would need to shoot all the way up to about $140 to really have that largely be covered and in the money. And then if that was to take place, we would see really strong gains. But I mean, just the fact that we could even hit $140 would be a substantial statement, since previously the highest we hit was, I believe, $74. I think it was just under the $75 mark. So is it possible? Yes. Is it likely to happen? Right now, not so much, and there's some other theories going on with that. Still negative numbers going on with the dark pool. I find that absolutely bizarre. I mean, we're talking about $6.8 billion worth of negative shares in the dark pool. AMC's report for Ortex's report for AMC, sorry about that, is the short interest rate is estimated to be at 14.63% of the free float. A lot of this is being suggested because there's borrowed shares, and the borrowed shares are not actually then being shorted upon, they're just being returned, which is kind of a bizarre mechanic for me to think of anyways, but you know, people are doing that. And just moving on, we got Omnia2021 over on the AMC stock subreddit. They had this really interesting little discussion here. So they said, so what happened last week? Manipulators, they attempted to drop the price below $30, but found themselves trapped. Calls and puts in the money has an imbalance that they couldn't shake. Dropped below $35 meant more puts in the money, but above $37.50 meant more calls in the money. So it was a balancing act last week. They had to keep it in a channel where the price had the best balance or for calls and puts in the money. Fast forward to Friday, closed in the $35 to $37.50 channel as they predicted. This meant about 140 to 150,000 contracts expired in the money. Monday, price drops. This is SHF's testings the water for the puts and calls on the money. Where is the balance? They need it low on Monday because shares have to be purchased on Tuesday, but it gives them the opportunity to see where the puts and calls for the Friday's close find the best balance. They absolutely know the price is going to go up on Tuesday when 14 to 15 million shares have to be bought to close out options from Friday. So this week will be about keeping it in the channel that provides the best balance of puts and calls in the money so that too many don't get called in the money if they drop the price, right? Currently, 71,000 calls and 15,000 puts in the money. Drop the price and they risk 175,000 puts in the money. Let it rise and the puts 198,000 calls in the money. Boom. There's a reason for price action. It's not apes buying the FOMO, it's SHF manipulating the price to prevent a sharp price increase that increases their over-leveraged positions that lead to a margin call. So in short, what this is essentially trying to say is that they're trying, their big objective goal is for the rest of this week, the price doesn't really go anywhere. So the next several days, we just stay right where we're at. That way then there's not more calls that can go through for their options contracts and be in the money. And in the money is an important thing, guys. Just keep that in mind. If you're not familiar with call options, there's a lot of stuff that goes into it. So in the money is an important thing. So the call options, where people think the price is going to go up, if it does go up, there's going to be more that end up in that position, okay? And in the money. And so then if the price drops down and people are putting puts where they're saying, hey, I'm going to make money if the price drops. Well, the thing is that if it drops too much, then they're going to be also making a lot of money, but it's also going to end up fueling back into the purchasing of shares. And so essentially their goal is just to try and make it to where like essentially nobody is buying a ton of shares. So options contracts has a lot of benefits to it, also has a lot of negative things to it, and it's a risky market to really dive into. And so basically, guys, the position here that a lot of people are trying to stress, and the hope is that people will start steering away from options contracts because they haven't exercised them yet until they actually exercise them. So they don't actually own those full shares. They're just using that as a premium, essentially, right? And it's being a contract. You meet certain standards and then you get those things. So the thing is, a lot of people are suggesting like, hey, let's just buy the shares and own the shares, and let's try not doing these option contracts. I'm not giving you guys financial advice on this. I'm just letting you guys know this is what I'm seeing a lot of the people in the community is discussing, and they're saying, hey, this could potentially help us move into a better direction. So that's something that's very interesting. The other thing is payment for order flow, which is actually giving a big benefit to these people like Citadel, and it's something that's been discussed a lot about inside this industry space, the payment for order flow. And some people are suggesting, hey, maybe everyone should start using one of these other exchanges where you can buy stocks that doesn't use payment for order flow. So maybe that would help prevent them from rerouting these things when you're purchasing the shares and it going over to the dark pool and it stays over on the light pool side. So we'll see how that continues to progress with that conversation. Something else that's going on is about this section 601. I'll go ahead and include a link in the description for this. I've been seeing a little bit of discussions going on for this. So people say, like, how could AMC stock actually be getting traded for these ridiculously high prices? People are theorizing that there's trades of AMC stock for like $6,000 a share that's going on these other exchanges, suggesting that like, hey, this is where we're going to be leading up to. So there was an amendment that took place, and this amendment is section 601, and people are believing that this could constitute what those theories are being related to. Again, this, just to clarify, this is theory. So this says away from the market sale for purposes of rules, and it lists them, applies to transactions that occur without reference to current market prices and investment, commercial, or trading considerations. Okay? So it says like right here, for example, Party 1 wants to give Party 2 50 shares of ABCD security, but to have the shares transferred correctly, Party 2 must buy them for a nominal value that is unrelated to the share price. Member BD1 affects the sale from Party 1 to Party 2 and would be required to submit a non-tape report to FINRA with the .RA trade report modifier. So that means that if they did go through this route, well then FINRA should have this data being also relayed over to them. Should be, right? We see rules going over all over the place, and then it seems like a lot of this stuff isn't actually being enforced, such as the failure to deliver, which is like, hey, we agreed to a contract, and the contract is now expired, and you're supposed to pay up, and lo and behold, you didn't pay up. Failure to deliver, right? And we saw huge numbers that suppressed the price from passing that $60, $65 level for AMC stock recently, an absolutely astronomical high failure to deliver numbers. I covered that in one of my recent previous videos on AMC stock. So if you guys want to check that out, you guys can find that as well. So I'm going to go and wrap that up there. You guys let me know how you feel about everything in the comments down below. If you guys want some free cryptocurrencies or free stocks, check out the links that I got in the description. It's free money for you guys. And also, if you're new, don't forget to hit subscribe, hit the thumbs up like button. Appreciate it, guys, and feel free to share the video. I will see you in the next episode.